Joining us now from Singapore and via Skype is investor and author Jim Rogers. And Jim, thanks so much for being here.
I'm delighted to see you again, Kathleen.
Well, U.S. stocks Monday tanked after the U.S. lost its AAA bond rating amidst the debt crisis. Is the market headed for a crash?
We've had a crash, Kathleen. Turn on your Newsmax. You'll see. I would suspect whenever you see collapsing like this, it's usually at least a temporary bottom. I'm sure that we're going to have many more problems in financial markets over the next few years. We may have a temporary bottom at the moment, but if it rallies, I certainly don't plan to buy stocks.
Are investors right to panic right now?
No, you should never panic when everybody else is panicked, Kathleen, unless the world is coming to an end. Wait until there's some kind of relief, and then if you want to panic when everybody else is heaving a sigh of relief.
Is the U.S. on the brink of a fiscal Armageddon right now?
On the brink? I don't know what that means. You mean this week? No, not this week. This decade, absolutely. Probably sooner than this decade. It is astonishing. America's the largest debtor nation in the history of the world, Kathleen. This is not good news, what's going on in Washington. These guys are really out of it. They don't understand what's happening, and we're all paying the price, and it's going to get worse.
Jim, are we entering a second recession right now? Is this the beginning of the double dip, if you will?
Kathleen, I don't think we ever left the first recession. If you look at the facts and the statistics, unemployment is now higher than it was before. What happened, Kathleen, was the government spent staggering amounts of money, and the people who got that money are certainly better off, and all of their friends and neighbors, etc. But overall, the situation is worse. America more than quadrupled its debt when you take into consideration the things that they guarantee. Bernanke printed unbelievable amounts of money. The situation is worse off. I don't see that we're sure the people who got the money are better off. I don't think we ever left the first recession. This is one long period of economic difficulty, and America's going to pay the price for all these mistakes.
Some say that we're in a depression right now. Do you agree with that, or are we at least on track for a depression?
Well, we could certainly wind up in a depression if they keep making mistakes in Washington. I wouldn't call it a depression yet, but the way the world is going, and if politicians keep making mistakes, it could happen again. That's what happened in the 30s. You know, they turned in what should have been just a normal bear market and recession. They turned it into a huge depression with mistakes. They're making plenty of mistakes this time, too.
Jim, who do you blame for the economic situation that the U.S. is in today?
Well, if I had to blame one, it'd be the Federal Reserve would be the main culprit, because, you know, they kept bailing people out instead of letting the market clear and instead of letting people go bankrupt, start over. If I had to blame one group, I would blame the Federal Reserve under Greenspan and Bernanke. If I could name two or three, there's some others I would add too.
Should Tim Geithner step aside in your view?
Tim Geithner never should have gotten this job, Kathleen. It's so embarrassing. The reason well, first of all, you know, he was the person who was overseeing the New York crowd, and he kept bailing them out, and that's why we're in the problem. He's been working for the government for 15 or 20 years now. Go back and look at his record. Everything he's ever done has been wrong. He's just been totally wrong. The reason he got the job, Kathleen, Obama called up all the people on Wall Street, and they said, give it to Geithner because he's bailed us out. Every time we need something, we call him up. He's a puppet. He gives them what they need. That's why they told Obama that he should hire a Geithner, as I said to many people at the time. In fact, Fox called me about it today. You know, Geithner doesn't know what he's doing. I explained in March of 2009 that soon the world would know he doesn't know what he's doing. Soon Mr. Obama would know. And now the world, anyway, knows he doesn't know what he's doing. Apparently Obama doesn't know yet.
And what about Ben Bernanke? Should he step aside?
So likewise, Kathleen, if I were on your program every week, and I was wrong every week, you wouldn't call me up anymore. Well, Mr. Bernanke has been wrong for 400 weeks in a row now. He's never been right about anything. Newsmax should go and do a study of everything he's done since he went to Washington. Neither one of these guys should have gotten the job. In 2009, what's his name, Obama ran on a platform of change, and then he brought in the guys who caused the problems in the first place. They shouldn't have gotten the jobs. They should leave. They should get somebody else who at least understands economics, finance, and currencies.
So you're saying you would not put or invest your money in the market today. Where would you put your money?
Well, if the market collapses, Kathleen, then I will cover my shorts. I have been short emerging market stocks, and I have been short American technology stocks and a large American bank. If the market collapses, I will cover my shorts, or most of them, and I will put my money into real assets, that's commodities, because if the world economy recovers, Kathleen, then you're going to make a lot of money in commodities because there's shortages. But Kathleen, if the world economy doesn't recover, you're not going to make any money in Toyota or IBM or stocks. You might make a lot of money in commodities because they'll print more money. It's a lot like the 1970s, Kathleen. In the 1970s, stocks did nothing. In most cases, they went down. But commodities had one of the great bull markets of all time. So this is the 70s again, if you ask me. So I will buy more commodities if the market collapses.
Okay. Let's talk about quantitative easing, because there's talk of yet another round of quantitative easing. What impact would QE3 have on the U.S. economy and global markets?
Well, the market is finally catching on. QE1 and QE2 didn't work. They made the situation worse. People now know. That's why gold is going through the roof, Kathleen, because people realize that if they just print more money, it's going to cause more inflation, more currency turmoil, eventually higher interest rates, and much more inflation. So I'm sure they're going to do it. The problem is Bernanke doesn't know anything else to do. I mean, he's not a very smart guy. He doesn't understand currencies and economics and finance. So what he will do is print more money. Now, Kathleen, he may try to disguise it. He may call it cupcakes. I don't know what he'll call it. He'll make up a name so that he's trying to fool us. But no, they're going to print more money. It is absolutely the wrong thing to do, but that's all Bernanke knows. He spent his whole intellectual career studying the printing of money. Now America's given him the printing presses. You just wait till we have real problems. He's going to run them just as fast as he possibly can.
Now, you touched on gold. Where do you see gold prices headed, and what about silver?
Well, I own both of those. It worries me that gold has been going up so fast, so strongly recently. Whenever you have something like that, it goes straight up. It usually leads to some kind of correction. I'm not going to sell my gold. I hope it corrects. If it goes down, then I'll buy more. I mean, if it keeps going into a parabolic rise, Kathleen, I'll have to worry, because all parabolic rises eventually collapse. I'm not selling either of them. If they go down, I will buy more. They're both going to much, much higher over the course of this bull market, or over the course of this decade.
Jim, if the U.S. economy cools even further, what is that going to mean for oil?
Well, oil will probably go down, at least for a while, because everybody's dumping. You can see that everybody's dumping everything. But Kathleen, if that happens, I hope I'm smart enough to buy more of it. If we have continued panic in the markets, what I'll have to do, what I plan to do, cover my shorts in the stocks, and then buy more commodities, and I'll buy the ones that go down the most. I think agriculture is probably a better buy, but if oil does collapse because there's forced liquidation, then I hope I'm smart enough to buy more oil or natural gas or whatever goes down the most.
Jim, what about treasuries? Do you think that they'll remain a safe haven?
In my view, they haven't been a safe haven, but on the other hand, they've been going through the roof. I've been short treasuries recently, and I'm losing money because of that. I'm losing a little bit, not very much. No, eventually, Kathleen, everybody's going to understand. America's the largest debtor nation in the history of the world. No, everybody's going to eventually realize that the U.S. Treasury market and U.S. dollars are not a safe haven. It's going to go the way of the pound sterling. The pound sterling used to be the world's reserve currency. Gilts, as they were called, English government bonds. There came a time in the mid-70s when they could not even sell government bonds in the UK. The IMF had to bail them out. We're on that road. It may not happen this year, or even, well, it'll probably happen this decade, but it's not going to happen anytime soon, probably. But be very careful.
Now, China has long been a driver of commodities prices, but some say the economy there is due to cool or even crash by 2013. What's in store for the Chinese economy, and how should investors play commodities with that in mind?
The Chinese have been trying to cool off their economy pretty rigidly or sternly here for a year or two now. They've raised reserve requirements a dozen times. They've raised interest rates a half dozen times. I wish the Chinese central bank were running our central bank. I mean, these guys know there's inflation, and they're trying to stop it. I wish our central bank would try to stop inflation instead of pumping all this money into the world. China, I hope they slow their economy down. It'll be good for China. It'll be good for the world. It'll be good for America if they do. And certainly, if somebody like China, any source of demand, if it's cut or if it cools, then that slows demand. But Kathleen, again, I expect all this to happen. I'd rather own commodities than stocks for the reasons I told you before. If all this happens, you're not going to make any money in stocks. You might make money in commodities like you did in the 70s because they'll print money and there are big shortages developing in all commodities.
Jim, a few ratings questions for you before we go. Will the U.S. ever get its AAA bond rating back, and do you think that the U.S. could still default?
It's not going to get its AAA rating back in your lifetime or mine. Will they default? Yes, they're going to have to default. I mean, look at the numbers. Get out a pencil or a calculator. It's physically and humanly impossible for the U.S. government to pay back the debt, especially with its off-balance sheet obligations. They will default one way or the other, Kathleen. There are many ways to default. You can just print money. You can pay people back in worthless currency. You can change the rules. Look what they did with Social Security. You know, now they took our money. They promised they'd give it back to us one day. Well, now they give it back to us, but they tax us to give us back our own money. You know, there are many ways to default. You can put on exchange controls. There are lots of ways to default, and America will certainly default. Whether there's ever a day when America says we won't pay our bills, probably not. They're more likely just to give you worthless money.
Do you see more downgrades coming?
Oh, yeah. What surprises me is that it took so long for the rating agencies to downgrade America. America's been a staggering debtor for a long time. But, Kathleen, these are the same people who said there were AAA subprime mortgages. Moody's, I think, did something like 40 AAA ratings every day during that boom. Moody's and Standard & Poor's said that Fannie Mae was a AAA credit until the day it went bankrupt. So why do you pay attention to these people? They don't know anymore. These people are just young college kids, or maybe college kids who work their way up, or perhaps MBAs. They don't know anything. Don't pay any attention to the rating agencies.
Jim, last question real quickly. What do you think needs to happen for the U.S. economy to improve for all Americans?
Well, the only thing that can solve our problems, Kathleen, is to look at the reality of the situation. We have made some terrible mistakes in the past 40 or 50 years. We've gone from being the only creditor nation in the world to being the largest debtor nation in the history of the world. Now, we've committed huge excesses. You don't just wake up one day and say, okay, that's over, that's fine, now let's move on to the next thing. We're going to have to take some pain to admit our mistakes, have some real bankruptcies, cut spending with an axe, with a chainsaw. We've got to cut spending with a chainsaw at the government level, and it's not going to be fun, but Kathleen, the more we put it off, the worse it gets. You know, let's say, well, put it off till after the next election, or after the next election after that. The more you put it off, the worse it's going to be. We need to bite the bullet, take our pain. It's not going to be fun for 2 or 3 years, but other countries have done it. Scandinavia did it in the early 90s, Mexico, Russia, South Korea. I mean, the world is full of examples of people that made mistakes, acknowledged their mistakes, took the pain, reorganized, and came out of it much stronger. We keep trying to put it off, and it's making things worse.
Jim Rogers, thanks so much for being here. As always, we appreciate your insight.
It's my delight, Kathleen. Let's do it again sometime.